Welcome to the Phoenix Prosperity Podcast, where wealth meets legacy. Join your host, Tim Fergestad, as we explore the journeys of Phoenix's finest to success and beyond.
Hello, this is Tim Fergestad. Thank you for joining us. From revolutionizing real-world asset tokenization at digital asset management to leading innovative IT solutions at Gel Enterprises, today's guest is bridging traditional markets and modern technology to create smarter, more accessible opportunities for businesses and investors alike. Juan Lorenzana, welcome to the show.
Thank you, Tim. Thank you for having me.
All right, Juan. So you've worn lots of hats. You've done all sorts of cool stuff. Can you give us a snapshot of sort of where you're at right now and what your goals are in 2026?
Sure. So we're lining 2026 to be kind of a very productive year for us. So we've got lots of initiatives that are mostly focused on expanding our businesses. So currently today, I have 4 businesses that I operate. One is an IT technology consulting firm and had that business now for 20 plus years. Love that. It runs on its own. I've got a great team that support my clients, and we do basically anything that you can imagine that has to do with computers, everything from writing programs to supporting servers, cloud-based solutions, and so forth. The second business, believe it or not, is my wife's business. And as an entrepreneur, I got to say that that's probably my favorite business. And she owns a smoke shop in a little town called Wickenburg, Arizona. It's a cowboy town. She's the only smoke shop in town. And she does a phenomenal job. We sell what you would imagine a smoke shop sells. So we sell cigarettes, we sell chew, we sell vapes, and she does really, really, really well for a really small town.
Okay.
And then I have a asset management firm. This is kind of comes from my experience having been in technology and being asked to serve as a chief technical officer for some of my clients, and started that up. That's a very interesting business, because what we do is we build alternative assets for investors that typically invest in traditional investments, to be able to invest in everything from medical AI plays to data centers to Bitcoin mining to gold, even to animation. And so enjoy doing that. And then the last company I have is that just an employee management company that we use to manage the employees.
Sure. Okay. Very cool. Now, just for our listeners again, alternative investments is kind of a weird name, because historically it was anything that wasn't the popular stocks and bonds, which was the bulk of many portfolios. Many big institutional places and family offices and stuff, they would have mostly stocks and bonds and a little bit of some alternatives. Whereas nowadays, stocks and bonds are less than 50% of most portfolios, and so the alternatives are actually more the majority.
That's correct. Yep.
That's funny. Anyway, I'm a big. I mean, real estate falls in the alternative space. That's where I largely play myself. So I'm a big fan. By the way, do you have any energy history or interests like oil and gas?
You know what? So something that makes my firm a little bit different is that when we look at alternative assets, we look at all different types of alternative assets. So believe it or not, yeah, we've been approached about different types of energy plays, different funds that we could start to support people. One of the things that we like to do is we like to form funds around an actual company. So we have clients that come to us and say, listen, I want to raise $50–100 million. Can you help us? And that's what we do. So we help them form the fund. We are the fund managers.
Okay.
And so we end up learning about all different types of things. So even that data center play that I was mentioning earlier, that's a big investment into real estate with energy. And so we call it an energy infrastructure fund. But yeah, we deal with everything from oil and gas, and particularly when you talk about alternative assets, you start thinking about certain assets like crypto. That world is looking for combinations into real estate and into energy, particularly oil and gas.
So your background and your companies have overlap, right? There's the tech. You're bringing tech to finance and helping you set up funds and manage them, maybe even for people.
Yeah. And to give you a different spin on this, I graduated, got a degree in computer science, emphasis in software engineering, and I went to work
Okay.
for Lucent Technologies, at the time was a big technology firm. They built the telecommunications industry for the United States and around the world. But I went from engineering software solutions to now engineering financial solutions. And so when we look at alternative assets, we always try to engineer them with very unique components that make the investment more appealing to an investor. And so if we have a fund, for example, it's not unusual for us to take whole life insurance policies on all the executives on that team, for that company. Why? Because it protects the fund. It's not unusual for us to add a hedging component, right? Something that could produce an extra yield into that type of fund. So we look to engineer alternative assets.
Okay. And another level of that is the tokenization, right? Again, with the
Yes.
technology and the finance together, can you explain that general concept to our listeners, please?
Sure. So tokenization is a unique concept in which you're able to take an asset and put it on the blockchain. And so when people hear blockchain, they often think of crypto, but blockchain is more than crypto. It's a type of technology that allows for things to occur and transact a lot faster. Plus, it goes on a public ledger where everyone can see the transaction. And so when we talk about tokenization, we're talking about taking assets that are classified as securities and putting them on the blockchain as a token offering where investors can purchase that token and participate in that ecosystem. So tokenization is just a different mechanism to offer security in a way that it really does give you access to the secondary markets, as well as helps provide liquidity for a fund or for an investment.
Okay, so can you explain how tokenization differs from NFTs or cryptocurrencies and how people often confuse them?
Sure. So a cryptocurrency is basically a token that's been created that serves for some type of exchange economically. So the most common ones that everyone knows about is Bitcoin. But Bitcoin isn't widely accepted. It's growing in popularity. The price of Bitcoin has gone way up, and it has a 4-year cycle that people like. So it depends on when you buy. If you buy high and it loses 80% of its value, you're going to be in pain for 3 to 4 years. But if you bought low and it increases, then you're pretty happy. But cryptocurrencies are different in that they provide a financial tool. NFTs also go on the blockchain, but this is really based around keeping track of ownership is probably the best way of putting it. So you can have art, you can put assets into NFTs, and it's the NFT or this image or the data that's included that lets you put it on the blockchain and track it on the blockchain. Traditionally, NFT started off as art. It could be any art. Cyberpunks developed a whole set of little memes and people paid millions of dollars for them. But it's evolved now so that an NFT can be any type of art or data that's put on the blockchain. And tokenization, you're really looking at putting an asset on the blockchain. There might be an NFT component to it. But tokenization is taking a real world asset like gold or real estate, or even physical collections of art, and putting those on the blockchain and being able to own a small piece of something bigger. And that's really where tokenization excels. It involves owning a small piece of something bigger, the same way that you might have a stock. You might own shares of Apple stock or Intel or Microsoft or Google, for example.
Okay, so now that we sort of laid a little bit of the groundwork, can you walk us through the life cycle of a tokenized asset? Maybe from the initial setup, right? How investors buy it and trade it?
Well, so you've actually hit kind of where this world is changing right now. We have a new administration that has come in, and they are revolutionizing not only the cryptocurrency space, but they're also revolutionizing how tokenization is going to play out in the United States. So in the past, there are lots of platforms that someone could go to get something tokenized. Unfortunately, if you did that in the past and outside of the purview of the Securities and Exchange Commission or the CTFC or the OCC, you got yourself in trouble. And there are a lot of folks that unfortunately ended up in a lot of hot water after having tokenized assets, particularly in real estate. People who tokenized real estate really early outside of following the guidelines got fined, and some people actually got thrown in jail. Today, because of the current administration, we're seeing a lot of new changes where now we're able to continue tokenizing, but you do it under the guidance and the purview that's been laid out.
Okay.
And so the platforms where you can use and tokenize something without oversight and governance are still considered very high risk. The platforms where you tokenize an asset like through a company called Securitized or Fireblocks, those are done per the regulations of the United States, and those you're not going to have any issues with. So depending on what you want to buy, there are different platforms that Fireblocks offers or Securitize or others where you could go buy a tokenized asset. And there are plenty of players that don't follow the regs today.
Right.
That may end up in hot water later. It's just time's going to tell.
Okay. So those are the different maybe operators or tokenizers, if you will. But can you speak a little bit to the different kinds of assets that are best suited for tokenization and maybe ones that are maybe too complex or too early?
Sure. So we like real world assets that they fall really quickly to be tokenized easily. Real world assets could include, for example, investment into gold or silver that gets tokenized, right? Real estate is a perfect example of something that can be tokenized. But you can actually tokenize everything from a revenue stream or intellectual property or the return from an investment into a company. It just depends on how you structure that tokenization offering. And the key is you still have to go and register it appropriately. So, if it's a private security, you have to register it as a private security. If you're going to do a public security, you might use an ETF or a registration A to offer that. But you can tokenize just about anything. And that's where we are today. If you were to ask me where I think we're going to be in 5, 10, 15 years from now, everything will be tokenized. Even your stock portfolio will be tokenized. Your bank account will be tokenized. And all we're going to have is tokenized assets. But it's going to take some time to adopt that and get there. And everything from your stocks, US treasuries, everything can be tokenized.
So for an everyday investor, what's that future look like?
Well, today it's probably going to start off by working with a properly registered platform to make those purchases from. And right now, you're going to mostly look at gold. You're going to look at real estate, and you're going to find a few things here and there where people have tokenized offerings. We're working on a few things that deal with the space economy, which I think is going to be phenomenal, as well as different sports. So tokenizing of clubs or of players or of teams are real opportunities that we foresee here in the next 5 years for sure. And within 15, like I said, we expect a lot of things to be tokenized.
Okay. How is that going to change what's possible? I mean, just like I can easily and quickly buy part of the Arizona Cardinals.
Exactly. Yep. So that's probably, when it comes to how tokenization is going to change the world, that's probably what's going to change the most. It's really providing access to products and solutions and assets that most people did not have access to in the past will now be able to access them here in the future. So you'll be able to go, to your Fidelity account, your Charles Schwab account, to your BlackRock account and buy these assets and participate in that ownership. If the company chooses to offer something through tokenization.
Okay. Historically, right? So the SEC, about 100 years ago, the SEC was formed to try to protect investors. I think it was people were selling swampland in Florida to people in New York or something. But
Correct. Yep.
The idea is the SEC made rules and said you have to be accredited for certain types of investments, which means you have to have a certain net worth or be particularly savvy in a particular thing. And then crowdfunding came along, and they said, well, it seems like a step towards tokenization where you're going to just let anybody buy as long as it's a smaller amount. Is that kind of the idea?
Yeah, it's exactly the same idea. So crowdfunding was created to allow your typical investor that's not accredited to be able to participate. And so the SEC created a regulation CF for crowdfunding that allowed companies to make these offerings out to the public. And so we foresee that the regulatory bodies are going to continue to support that, and that access is going to be opened up to allow investors to invest in things that typically they did not have access to in the past.
Right. And it would change the nature of some investments. So again, I'm a big real estate fan, and there's something called the illiquidity premium, right?
Mhm.
Generally, if you can get a better return, but your money gets locked up for longer. And
Yeah,
a big part of that in real estate, a lot of what I do is, 3 to 5 years is the commitment. And that seems like a long time for people who've had the luxury of just being in the stock market and then get their money back whenever they want. Although you don't often make as much, right? So that's that premium, right? So you can have
correct.
access to it like in a savings account, but you're not going to get as good a return on your money. Um, Something that tokenization can do is maybe make real estate, for example, or other illiquid investments as easy to trade as stocks currently are.
Yeah, so typically in the financial world, in the capital markets, you had things like real estate or even an investment into a company. A company A is raising $5 million, and they go and they meet a few people. We call them angels that give them 50,000, 100,000, 200,000 there. And the first question that they always ask the entrepreneur is, well, what's the exit strategy? And the common thing an entrepreneur would say was, we're going to go public in 3 to 5 years, or we'll get bought out.
Yep.
And what ends up happening is that those are very illiquid assets, just like your real estate, in
Mhm.
that if the investor wants out, he doesn't really have anyone to sell it to. He's got to call his friends, he's got to call other investors and try to sell his share to somebody else.
Right.
Well, tokenization provides access of these assets to a secondary market. And so it's in the foreseeable future, a lot of these illiquid assets will have a lot more liquidity. They'll be able to be bought and traded 24/7. And as long as you're on the platform that offers that asset, that will solve a lot of things when it comes to liquidity for different types of assets like real estate, private equity, debt, so forth.
Okay. What's the consensus on supply demand ratios if let's say you just released uh let's say 1,000 investments to the masses that was usually restricted to, let's say 1,000 people, and now all of a sudden there's 1 million people who have access to it. I'm imagining supply demand has changed a lot, right? The supply is still the same, but now all of a sudden the demand is potentially a lot bigger, even though they might not have the same appetite as those high net worth accredited people that were restricted to before. Is the expectation that this will increase the values of a lot of these sorts of assets?
Values are always a very interesting conversation because values are driven by supply and demand. But I think the thing that's going to change the most is going to be the fact that your investors are going to have a choice to invest in stocks, bonds, treasury bills, mutual
Movies?
funds. Yeah, and then they're going to be able to invest into movies, sports teams, maybe even players of a sport, or assets that are going into space. It's really going to open it up so that the people that need the money have greater access to people that want to participate, but that are going to participate at a smaller contribution level. And I think that's where we're really going to see the biggest
So
growth. It will impact price and value, definitely.
okay. Um, but it'll be a broadening as well as an increase in the demand. There'll be
Yeah, I like to think of it as you may have heard of the company Robinhood.
mhm.
right? They were recently involved in a play where uh, several uh, several companies, large companies, had shorted a certain stock, and Robinhood was able to rally, not them, but their community base was able to rally behind this company that everyone was expecting to fail. And all of a sudden, because they were buying, the price went up.
Mhm.
And so it hurt this institutional player because they rallied a community. I believe it was on uh, Telegram or Discord, where they rallied everyone that participated, and they were able to impact the market. And
Right.
so we may see a little bit more of that, but I think what we're more going to see is traditional people that want to try something out can now afford to try something out at a much smaller investment level. A lot of things that are designated for accredited investors have minimum investments. You got to
Sure.
invest 25,000, 50,000, 100,000, half a million. Some investments you got to be able to put in $100 million. Well, the traditional person, non-accredited, can actually not do that. But with tokenization, they'll be able to start doing that into whatever gets them excited. So if you're a big fan of ice hockey, maybe that's a great thing for you. Maybe you enjoy gaming,
Mhm.
and a gaming company decides to share the revenue in a new and upcoming game.
Right.
It's just going to make it so that a lot more things can be offered to the general public.
Is that responsible? Right? I mean, because the idea historically, the SEC was restricting it for people who knew how to do proper due diligence, right? And uh, it wasn't just like going down to the store and picking your favorite can of soda pop. It was you were required to or expected to do your research on everything you were buying. Um, what kind of restrictions or education or criteria do you think would be given up in that sort of scenario?
Well, if you look at the regulatory bodies of the United States, whether you're talking about the SEC, the CTFC, the OCC, whoever it happens to be,
Mhm.
they have support for both private and public offerings. So the difference is that some of the public offerings, you don't need to be an accredited investor, right? And so
Mhm.
these governing bodies provide the guidelines in which the company that is forming the asset to be offered as an investment have to abide by. And what we're seeing is that they're opening up not just to non-accredited investors, because you've been able to do that already today, right? As a non-accredited investor, you can invest
You can
into an
go,
ETF,
you,
right?
you can also get a wallet and get some Bitcoin or something.
Exactly. Yeah. So those things are already available. What it's going to do is just provide a better opportunity to learn about them, because you're going to have more of these companies offering it. Everything from BlackRock and Vanguard to Fidelity, Morgan Stanley, Charles Schwab, LPL Financial, all of these companies will eventually have these types of assets. And if you're an investor, whether you're using Robinhood or whether you're using Morgan Stanley's back end, you'll be able to pick, wow, here's something new I'd never seen. Maybe I do want to
Right.
participate. And each of the regulatory bodies will have the requirement of what needs to be disclosed. And that's really what these regulatory bodies are there for. They're there to protect the investors by making sure that the proper information is disclosed. And so in the fund world, for example, when we deal with private securities, the general rule is disclose, disclose, and disclose,
Yep.
right? And that's what keeps the issuer safe. And so as we talk about tokenization, we're going to see that there's going to be those same offers. The same way that if you go to a crowdfunding platform and you learn about a company that's developing a new watch that doesn't need a battery and it works off of solar, you might want to invest. You would read all of the materials. That's the disclosure part. And so a lot of these regulatory bodies, they're just expanding what can be offered, but their main job is to make sure that all the information is properly disclosed to investors so they can make an informed decision.
Right. Okay. Okay. Thanks, Juan. That was all good stuff. I'm sure some of the listeners have nerded out with us on it. Um, so I have some, as we sort of wrap this up, I have some different questions, legacy questions, maybe impact and things that more purposeful or meaningful focus that you might have. But question I want to ask you is, have you learned anything, professionally or personally in the last 12 months that's changed your life?
Yes. Um, so I went through a divorce a few years ago and remarried, and I have a blended family.
Okay.
So I have 5 kids that are from my wife's previous marriage, and I have 3 of
Okay.
my own. So together we're 8. And over the last 12 months, what I've come to learn and I appreciate, and this is more of a personal success, is the role that we as parents undertake never stops. And so,
Right.
I've got my oldest is 36. My youngest of the 8 is 17, and we've got 4 grandkids.
Oh,
Uh,
wow.
and what I've realized is that being a father is about being engaged and spending that time with them. And so one of the things that I always did early on was spend one-on-one time with each individual child. But now
Okay.
with so many, it gets a little bit harder, but it
Sure.
still needs to happen. And
Okay.
this last 12 months, I've been really busy launching my asset management firm. And as a result, I've been reminded how much they miss that.
The
And
one-on-one time.
so, yeah, so it's been a good reminder to pause and take one of my kids out quadding in the desert, at the Boulders OHV recreational area, and take another kid and go-kart racing, or one of my kids likes to shoot, so we like to go shooting. So it's been good and healthy to no matter how busy I get, just the constant reminder to still be engaged in their lives, whether they're 36 or 17.
Right. And being intentional with your time by planning it, particularly with the grandkids too, to keep the family in your life, I imagine.
Absolutely. Yeah. And grandkids are great. They come over and you send them back. And that's the best part about it. But no, we like to plan when the grandkids come over, something to do with them. And sometimes it's just with grandma, sometimes it's just with grandpa, sometimes it's all together. But that one-on-one interaction has really, I found it to be good for me and for my children.
Right. Awesome. That's awesome, Juan. Thank you. Thank you for sharing that. Do you have anything exciting or any big initiatives coming up in 2026?
For us, we're excited about 2026. We think the economy still has a few ups and downs left, but that it should be turning around. And for businesses, that means growth. So we're always excited about hiring more people and being able to grow. So 2026 is really going to focus on how do we take our existing businesses under the current economic conditions, and what are the key metrics we're going to look at to know when to grow and how to grow. And because we have such
Right.
varying companies, right? I have a smoke shop in Wickenburg, Arizona. I have an IT consulting company in Phoenix. We got the employee management company. And then now we have this asset management firm that's creating private securities. Um, it's incumbent upon us to make sure we understand the financials around each of those businesses, and then
Sure.
what we need to be prepared for.
All right. Thank you, Juan. That's all great stuff. If people would like to connect with you or learn more, where can they go? What should they do?
The best way is to always reach out to me via email. Um, I would love to tell you, call my office, but I'm rarely ever going to be able to answer.
Yeah.
But yeah, if someone wants to email me, if they want to learn anything about different types of assets, or they want, they have a technology problem, or they'd like to visit our store in Wickenburg, they can always email me at JUAN at JEL support, SUPPORT.com. And that's the technology company, but that's the email that I read the most. So
Okay. Juan at gelsupport.com.
appreciate it. Yeah.
Okay. Excellent. Good stuff. Thank you very much. Thank you, everybody, for listening and watching. Thank you, Juan Lorenzana, for joining me today. Very much appreciate you sharing your insights into FinTech and everything you're doing.
Thank you very much for having me on.
Inspired by our guests? Visit phoenixprosperitypodcast.com/guest and join us on the show and share your success story with Tim. The spotlight awaits.